This is our next panel at FinTech in 2021, coming to you live from Vilnius in Lithuania. Our next panel is entitled Moving from Open Banking to Open Finance, What does the future look like? And we're going to look at the state of open banking right now and what opportunities will that present as we're moving towards open finance, and what are the lessons that we can take from open banking as we move into open finance. And really the big part of all this, and it's been a common thread throughout the whole FinTech in conference, is how is the relationship between the banks and the fintechs. I like to call it, what is the dance? It seems like there is a dance going on, and in some aspects they're very close, in other aspects they're quite far apart. So to moderate this panel, we have Charles David, and he is a global head of bank partnerships at Railsbank. They're a global banking service platform, and it's his responsibility to work with the partners and develop those relationships to make sure that the fundamental underpinnings of open banking can work. Charles, how are you doing today?
I'm doing great, Lewis. Great to be live in Vilnius again, although virtually.
Virtually live. We're virtual, who knows? Are you looking forward to the panel?
Really looking forward to it. I think we've got interesting panelists, both from a direct-to-consumer as well as infrastructure players, to provide a full spectrum of views.
Okay, very good. Well, without further ado, let's start the panel.
Okay, well, thanks, Lewis, and hi, everyone, and welcome to the panel. We've got a great list of panelists here with us, which I'll let them introduce themselves very, very shortly. And we got Roland Masters, who's CEO of Nordigen, George Parks-Davey, Open Banking Product Director at Klarna, Evaldas Remikis, Chairman of the Board in Neo Finance, and Gibson Nascimento, Head of Solutions EMEA at Sensidia. A great diversity of views here, to direct-to-consumer companies and to more of an infrastructure side companies. So looking forward for a great discussion. Roland, if you can start with a brief introduction of yourself.
Yeah, absolutely. Hi, I'm Roland. I'm the CEO and co-founder of Nordigen, and Nordigen is Europe's free open banking data platform.
George, over to you.
Hi, my name is George Parks-Davey. I'm working with product in the Klarna's open banking, and we are data aggregation platform, a single API to provide access to the open banking data, basically. Hi, everybody.
Hi, Evaldas.
Hi, my name is Evaldas Remikis. I am the founder and chairman of the board at Neo Finance. And we have the product with the brand Neo Pay, and providing the payment initiation service for e-commerce businesses across European countries, but at the moment mainly in Baltics.
And last but not least, Gibson.
Hi everyone, my name is Gibson Nascimento. I'm the head of solutions at Sensidia, looking after the EMEA region. And Sensidia, it's a company that provides a full lifecycle API management platform, so enabling not only open banking, open finance, but actually every open initiatives when it comes to exposing and managing APIs.
Great, gentlemen. Nice to meet you all. Roland, I'm going to start with you, because recently I've read an article or post that you published saying open banking can be fun. And banking and fun are two things that are not normally set together. Can you explain what you mean by fun, and sort of fun to who?
Absolutely. So, open banking in Europe officially started in September 2019 when PSD2 came into force. Unofficially, it has been around for quite a bit longer, but that was the date when banks were supposed to have APIs that were exposed to the public, and licensed institutions could get access to those APIs. The thing about that initial push for open banking was that it was driven by regulation, and basically meant that only financial institutions could use it. So you had to in order to get access to banking data and to be able to build applications on top of the data, you basically had to have pretty deep knowledge in the financial services sector, and mostly that meant that only large financial institutions could use the early APIs. And that's kind of what, if you zoom out, that is anything but fun, right? So it's very predictable institutions. It's very institutions that are not known to be risk takers, and this is kind of like the status quo. Like the status quo is that it's mostly the large financial institutions who get to use open banking in Europe, and get to kind of build value and extract value from the new services. But on the flip side, the one thing that is absolutely critical for any innovation is for people to be able to play around with it. And what I mean by that is that we'll take a look at crypto. The crypto actually started as an interesting sort of concept, and first early developers who were building things on crypto, they actually used it for just for building toys, and this is this ability to have fun, this ability to play around with things, to try them out, is absolutely necessary for future innovation. And so when we think about the future of open banking, what we see is that, well, there's a infrastructure that is working. It's rapidly being adopted by the large financial institutions across Europe, but it's not adopted enough by developers. And for developers to actually start working with it, they need to have a playground where they can have fun. And unless they're able to have fun, they're not going to be able to build anything that's kind of completely game changing. So that's what we meant when we thought that that's what open banking needs today. And this is what I think is absolutely critical for open banking to go into mainstream, is the ability for developers to start playing around with those APIs and start to build apps, and then just have fun along the way.
Yeah, well, I think that requires also some data available that isn't true consumer data, but mock data. But George, Klarna is certainly already having some fun with Snoop Dogg and some other celebrities, and we've all seen the nice ads. What is your view on that? How would that change business models?
Yeah. I think, first of all, I read Ronald's article, was very nice. I enjoyed this. But I think he's totally right, but there's a step even before that. I would like to take it on the more regulatory approach. I mean, coming from a perspective that was pre the PC2 world, right? I think we have achieved defined feature parity in data we retrieve, but also in particular in the user experience that we have been able to provide for almost over a decade, right? I believe that PC2 right now today is in a very good way to establish and foster innovation, but yet looking across Europe, we still see a different interpretation of the legal building blocks, but also in the technical implementation by financial institutions. I think this is an issue. So over 2 years now that we're into the PC2, you finally start seeing feature parity in single markets coming along, and banks being able to provide functioning access. So that was like the first key, actually being able to access the data. After all, even though there seems to be an API, it also has to perform and be functioning, right? However, I believe we need more support from the national competition authorities to be able to set a clean and fair playing field, or as Roland mentions, like a playground for everybody, for every market participant. For an open banking provider like Klarna that operates on a European level and soon to be like a global player in this space, it's a very tough game to help our partners to elevate their products at the same level and quality in each market. I would have wished for much more clarity and less room for interpretation on how, like the PC2, the regulation is is set out and should work, right? And what type of accounts and data is provided to the customer. So that's actually where we're standing, our standpoint coming from a pre-PC2 world. And now we're hoping for like a leveled out playing field, a nice playground for everybody to participate in.
Okay,
Guys,
and
if I may.
Valdas, is that
Sorry
Yes,
to jump
go
in
ahead.
here, if I may. So before you ask something to Evaldas, one of the most interesting points that we've been discussing with our customers, prospects, and existing even internal conversation is how exactly to go beyond the regulation, which is something that George was just mentioning there, right? The PSD2 infrastructure, it's well defined as per se, but I think that most, or if not all the institutions, what they did was, let's comply with the regulations. Let's forget the playgrounds. Let's forget about the business models. So the playgrounds and the fun about open banking will only come once the big banks or even the small banks start thinking about new business models that can then generate more attraction to open banking, that it's not just comply with the regulation to then be. One of the questions that I normally ask my customers is, are you making money with open banking, or are you just complying with the regulatory stuff? Because open banking, it's there. Personally, I see two things. One, it's PSD2, which is the regulation to make sure that you can start a payment, you can bring more into the ecosystem. But for me, open banking, it's when you step out of the regulation and you see, okay, what exactly I can do apart from this. What kind of data I can open as well, and not just the accounts payment. So if I have a product here that I normally sell to a customer individually, can I open this to my competitors to sell as well? Thinking about a marketplace of financial services products, for instance, of insurance products. So I think that once the institutions start thinking outside of the box, of the regulatory box, then the playgrounds will be for sure much more appreciated and more useful.
Yeah, it's an interesting point. I mean, obviously starting from regulation, but once you start seeing attraction and revenue coming in, is that when you really want to open more or be even more guarded? And I want to have your view, Evaldas, as a company that provides services to the end consumer. What have you so far been able to do with open banking, if at all? Has it made any changes to your business model, or at least planned changes coming in the future?
So yeah, we should understand that this regulation is valid only for 2 years, and from a regulatory perspective, I would say it's the minimal requirements are set for all institutions to conform. So what we see that the banks, for example, they are not willing to provide more services or to bring more data for example, for third-party providers as we are. Just they are trying to conform the regulation and to supply the data which are needed, required by regulation. And when we talk to the customers, they are not happy mainly about the two things. One of the things is that they would like to go to have less steps to start and finish the payment, for example. Because at the moment, for example, in average, it of course depends on the country and on the bank. It's about five to six steps to finish the payment. And it depends on the country. For example, we have integration with the Dutch banks, and some banks, they provide much better user experience than, for example, the banks in the Baltics. So how to make these steps very easy and seamlessly is one of the questions, and another one is let's say more features or additional data to provide for third-party providers. And of course, banks are not willing to do something more than they are required. And this is a little bit, I would say, it's stopping us from developing the solutions for the users, which could be, let's say, much better, or talking about UX, or having some additional features they would like to have.
So we
I
were
would like
talking
to
about.
relate to
Go
I would
ahead.
like to relate to what Evaldas just mentioned here. I mean, we see it very similar. I mean, we share the same pain points when it comes to user experience, because this is what a main thing that Klarna is all about: smooth customer experience. And I think fundamentally, with the move to PC2, the banks, in my opinion, have made a wrong decision to just comply with the regulatory framework. I mean, even today, we still use direct access methods, right? Because there are APIs that are not working in certain countries. So, I mean, we did have a working product before the regulation started. I mean, given some boundaries, setting some ways, some standards, and then identifying ourselves. I mean, that was even a struggle to do so. But as we had that, I mean, banks should have probably focused more on providing added value services and sell those, and also basically make money off those API services, and let the expert, the market participants, actually take care of the consumer interaction, the customer experience, as this is our daily bread and butter. And I think we all, to some, except for some exceptions, agree that the banks are not the ones who foster really innovation and customer experience in terms of UX, how to drive e-commerce models, creating fintech apps and in user flows, right? So we here are the experts to do so. Yes, I think it could have been a little bit better, but now we're stuck in another situation, and let's see how we can move forward here. But I think on the panel, I guess we all agree on that.
Yeah, and George, what I think that the banks, the bigger financial institutions, I don't think they'll take an action to expand these payment services under PSD2 regulation. And I think the regulators should be more active here, and let's say to upgrade these PSD2 regulations to put more features. Like, for example, in Australia, you know that, for example, they have much more things to offer under PSD2 regulations, even insurance, mortgage loans, and similar things.
Well, in Australia, the Open Data, the Consumer Data Rights Act is a driving force, but at the moment it's still pretty much only within banking. But we were talking about banks not seeing the business value, or at least not trying to attract that value. And McKinsey recently published they believe that open banking will create value to the size of 1.5% of Europe's GDP by 2030. That's a lot. Roland, are we heading in that direction? What else is missing?
Yeah, great question. And I think part of that answer has already been mentioned by the gents on the panel here. Clearly, what is missing is the fact that banks have been very passive, to say the least, in the development of the APIs. They have been mostly looking at this as a compliance act, Gibson mentioned that there's a definite opportunity for the banks to take a more active role. I have a more pessimistic view. I would actually love to operate under the assumption that they will never ever do anything active in this side. And it basically then is up to the regulators and the developer community to save us, really, to extract the value from the open banking, to build new applications, to try out new applications. I think the fact that Klarna exists is really a testament to the fact that all of the innovation is not necessarily should be expected from the incumbent financial institutions, but can come from fintechs. And we've seen a record number of fintech deals in Europe this year, like an absolute record-breaking amount of capital being deployed into the fintech segment. I'm really betting on the fact that the fintech developers are going to capture this massive amount of value that McKinsey talked about. And if you take a deep dive into the McKinsey's report, there's a couple of fantastic things that they kind of reveal about open banking, a state of open banking in Europe, but also US, and they even talk about India. They have this magical chart where there's like this kind of like a this chart of like all the different use cases of open banking, and so where how many of them can we capture today? To capture them all would be to actually get this 1.5% of Europe's GDP by 2030, and then now Europe is able, like, literally to capture only 10% of that value, and then the limitations. There's literally two limitations to why we're not able to capture more. The obvious limitation is that, well, in Europe we're not able to get access to more data than just like literally 4 data fields. PSD2 is talking about accessing the person's name, IBAN, account balance, and historic transactions, and those are the 4 data fields we can access, and that's like a very clear limitation. Clever developers are going to figure out ways to make most of this data and to create lots of value, but it's really up to the regulators to help us expand the sort of the data points available, and at least to the just to learn from the Australian example, and allow us to have more like identity data, and allow us to have more of just different sorts of accounts and account information that banks know about you. The second thing that's which is personally my kind of biggest personally, recently, my biggest mission is the fact that open banking has been exclusively expensive. Again, if you take a look at who's using open banking data today, it's mostly the large financial institutions, and that's because, well, banking APIs have been extremely expensive to use. Like Nordicon has done something in this field. We've opened up our open banking API and to developers, and we're not charging for accessing PSD2 data at all, and we never will charge for this data. But like we've taken just one small step in this regard. I think going forward, as data is becoming a commodity, we'll see more providers open up their APIs and provide them for free, and we'll see more of use cases where value-adding services are being built on top. Hopefully, some created by banks, but I would probably bet it's the developers who are going to create most of the value and capture most of the value on that's being built on top of the raw data.
It's an interesting point that you're making about the cost of getting PSD2, getting open data up and running, and certainly. Personally, I think at the moment the way things are, it favors the big. It favors the large aggregators. It favors the large banks who can invest in making something out of it. Do you agree? Are we, Gibson? Maybe a question for you. Is that a limiting factor for open banking? Is there anything that we can do to change that? Are we moving power from banks to aggregators, or am I wrong?
I think that somehow we are. And Roland, you mentioned something very interesting there, right? The cost it's quite high indeed. But I would perhaps disagree with something that you mentioned there, which is we are providing all the data for free. So once banks and free doesn't really match, right? So they are always trying to make some money out of what they are doing. So in Brazil, for example, what they did as part of the regulatory framework that was built, they allowed the banks to start charging for data after a specific limit. So it's perhaps putting some thresholds to say, okay, up to this point here, open banking, it's fully open, it's free. But then if you want to consume more, then you have to charge. I think that once we reach that stage, I know it's difficult. Like George was saying, yeah, we want to go fully internationally, go to the US, other countries, and each country has its own regulation as well, and each country will have their costs associated to it. I think that first, I agree. Banks, they will be like a blocker for at least for a good amount of time. The fintechs or even the challenging banks, right? If you think about Monzos, Revoluts, N26, these banks, most of them, they're like fully digital, coming with a different approach, different purpose of banking. You don't have to go to the branch to do everything online very quickly, and they even allow other banks to connect to them in the same kind of fashion, right? It's everything online. But I think that in general, it's going to take a while for the banks to really buy in the idea of open banking. But I agree, the regulators have to push it to either expose more data or to expose more data points. We have countries talking about open insurance at the moment as well. So going really wide and not just focusing on payments, customer account. But I think that the regulators also have to give banks an opportunity to think about making money with this, because otherwise, indeed, they will continue to be a blocker. The costs will be still high, and if you think about smaller banks that may not have an internal IT team to build things for them, they then need to rely on something else, and then it becomes even more expensive for them because they have to sustain something. They have their internal operations as well because they may have a back end. So when I mean that they may not have people to deal with the new things, the new tech stack that is there, but they do have people to manage their back ends that are there for ages. So I think that it's a matter of finding this balance between, okay, this is how banks can take advantage of open banking and then feed into the ecosystem to make it broader. Otherwise it will be, banks will continue to be a blocker, and then we need to make sure, or the developers, like you mentioned, Roland, they will have to find a way
Yeah.
to extract information out of 4 pieces of data, which is quite challenging, as we know.
But what they've done, what you mentioned there in Brazil, brings back the question of who owns the data and whether the banks can actually charge for data that is essentially the customers, and should the customers have the right to have that free, basically. But if Aldas, so if as a consumer company, what more would you want? If you could now talk to the regulators across Europe, what would you ask them to bring forward?
Yeah, the current situation, as we know, banks provide only data points which are required by legislation. Yeah, and customers would like to have much more. So there are 2 ways. It's also possible to solve this demand, not pushing regulators to make it, but also banks already are trying to sell these additional features, for example, additional data points or additional features, for example, for payment initiation service for third-party providers like Neo Finance is. So the banks has an idea to leverage the data they hold about the consumers, selling, let's say, selling us the additional features or additional data for third-party providers, and of course, in that case, third-party providers would resell these features to the end user for e-commerces. So the question stands for me at the moment: is that situation okay for consumers and whole industry, or regulator still needs to decide which features and data points should be provided for free. And I do not have an answer. Of course, we as the third-party provider would like to have everything free of charge, and would like that regulator would push all these financial institutions to provide us data free of charge. But I don't know how it will turn on in the future. Maybe somebody of you can comment on this.
I can comment from the perspective that there's been a lot of talk. Sorry, I already stepped in. This question has been brought up by the UK banks as well, and there've been talks about building a paywall around data that's on top of the current open banking data. And personally, what I think this does, it really puts another cap on how much value can open banking bring to the economy and who can use open banking. So the problem with open banking in 5 years ago or 10 years ago was that to have open banking you had to invent technologies from scratch, and that was extremely expensive. And today we have free APIs and we have aggregators who are reducing the price, and the price to access data is converging to zero. And so like this makes the whole field more available and democratic. And to sort of like highlight what Evald is saying is that it's in everyone's interest that access to banking data is free, and it's not the data that banks own, it's the data that the account holders own, and the account holders should not have limitations to share access to their data with third parties, regardless of if it's kind of transaction data or it's their identity data or it's the information about their investments accounts. So my personal view is that not only PSD2 should PSD2 is free, but not only like PSD3 and PSD4 should remain free, but also as we move into open finance, all of that data should be free. And the regulators should just recognize the great work they've done with PSD2 and to continue doing that work. It's a really hard work to make banks have to build these APIs and to make banks be compliant. But if you're a bank, like compliance is part of your core competence, and the banks will figure it out somehow how to have both how to have free APIs and how to be able to use them themselves eventually to build new solutions themselves as well.
Yeah, Roland, if I may comment on what you're saying there, I think that a lot of open banking, like I mentioned before, it's around the whole PSD2 data exposure. I think that the future will actually start to change. So the game changer will happen when banks, for example, or even aggregators, they're able to offer services, so not just data. So when they start exposing their risk assessment. So yeah, I'm good at providing risk assessment. I have a service here that anyone can connect and consume the service. So this is going to be the game changer, in my opinion. It's when you start providing additional services on top of the data itself, because then you have the data that is free, for example, but then I got the data and now I need to do risk analysis. I need to do something else. I think that this is going to be the game changer. So all of these institutions are able to expose these APIs, but not only thinking about the data, but thinking about the services that can aggregate to them.
I think to me the blocker is that at the moment the banks are sharing data that they have, but they don't have access to anything else. If they had access to anything else beyond similar data sets that other banks are sharing about the potential customers that they share, it's only then that I think new revenues might be captured by banks. So George, question for you: what are those data sets out there? What else needs to be coming into under the auspices of open finance or beyond?
Yeah. Before I get into this question, just real quick a comment on what Roland and Gibson said here. Also, Eval has made some points here. I mean, restricting the data that you can retrieve. We had just the example of data that is beyond 2 years. To be able to retrieve that should be added with a price tag. KYC data such as address data, date of birth, stuff like this should be added with a price tag. I mean, we will end up in a world, in a scenario where we will have different perceptions, different interpretations, different pricing schemes, and then trying to, as a data aggregator or a fintech, try to put the price basically on the customer or our partners. Will be a nightmare basically, because we will have to have probably pricing for each of the banks if it's really bad. And even today, I mean, the banks are yet interpreting how to provide the data on their very own measures. I think we see, what is it, Nordea probably providing only 60 days of historical data in the transactions. We see banks in Germany that provide like 2 to 3 years of historical data, but then only for the very first session that you interact with the API and give strong customer authentication. But then on the background refreshes, they only limit the data to be 90 days. And I mean, the concept was designed to be available for 90 days to access the data in the bank and not limiting the data that is to 90 days, basically. So I think there has been a lot of mistakes implementing the consent features, the background refreshes, and how to access the data in the first place. But coming back to what data points are available there, I mean, I think we see true value if we are able in the future to combine the data. I mean, at Klarna, we do obviously have a lot of data around the shopping and the customers' shopping baskets, data, past shopping experiences. And I think combining the data, using the flows, creating new experience online will help us to elevate the new game in e-commerce, especially. I mean, we can now, with the data given and the shopping data, on the other hand, we know much better. We have much better insights of the customer's financial situation, and we can move towards a much better area where we can say, okay, we can reduce the costs, but we can be much more secure in the e-commerce space by using account insights, machine learning technology to be able to do a fair real-time credit assessment, not needing to look up like credit bureaus that are more expensive and maybe even outdated data. So I think we can help the customer to in the e-commerce space to be able to purchase much more, to have better user flows. But when it comes to open finance and moving towards open finance, I think we'll have to have a much better playing field with also the banks, but also other data providers such as credit card institutions, such as local databases within the country for consumer information, KYC data, and pull all these things together to be able to foster innovation also in other markets, such as the insurance space, the savings investment space. I mean, even the PC2 is now limiting us with only payment accounts, and even the payment accounts are sometimes not really defined. What is a payment account? Is it also a credit card account? Is it only a checkings account? So I mean, that needs to be opened up. With Ronald, I think you just mentioned mortgage accounts, right? What about savings? How can we move money from left to right? How we can create an open environment for investment portfolios, robo-advisors. So all of these things need to be taken into consideration if we want to be able to move into open finance. And I think the foundation is not yet there, and I think we have to, from the market side, have to push a lot to make this available.
And big, with open banking being so difficult and slow to pick up pace, what learnings can we share with the other sectors in finance if we want to get insurance, if we want the pension or the asset managers to open up the data? How can we make that transition a little smoother? Gibson, maybe start with you.
Yeah, I think that first lesson learned is a better interpretation of the regulation, or a clear definition of the regulations to avoid multiple interpretations. We were discussing about this week because we have, as a provider of APIs, right? So we don't provide the APIs, we provide a platform for banks or fintechs to be able to expose their APIs. If we think about open banking, then you go to the UK, you read the regulation and you understand something. You come to the Europe regulation. It's similar, but you can interpret it in a different way as well. So I think that having a much simpler definition of the regulation, it's key to get the next step, which George was mentioning there. It's the open finance. Once you start combining all the data and you start composing products, you mentioned, George, about the e-commerce, right? So you're buying something and then you can even offer not only a cheaper product, but you can also offer associated products, right? So you can say, yeah, do you want to split the payment, and do you want to buy insurance as well, because you are probably traveling to Hawaii to surf, whatever. So I think that it's going to really pay off when the regulation is clearer to understand, and that the players understand also that there is much more to do than just the accounts.
Ivaldis, what's your view? What learnings can we take?
I would say that it's PSD2, only 2 years. We are still very young, let's say, legislation, and I think that the evolution mostly depends on regulators. And we, as the market players, we also should be active and to push regulators to provide more data and so on. And some learnings about what I witnessed myself when we did the transition from, let's say, screen scrapping when talking about payment initiation service to PSD2. It was bad that it was no transition period, for example, and the banks was late to adopt regulation. And for example, we as a third-party providers, we were ready to connect all the banks and to offer the service for e-commerces, and many banks were late, and because it was no transition period. So talking about the new adoptions, about upgrades of PSD2 regulations, I think regulators should think about the transition period, for example, for half or 1 year, for the market to be ready for the banks to be ready on time to offer these services.
Roland.
George, go ahead.
Yeah, thanks, Lawrence. I think I would just want to just what Ivaldis just mentioned. I think he made very, very good points, also coming from the pre-PSD2 area. I think the major learning has been we do need more communication. We need more collaboration and cooperation together with the banks and any data provider. Being a first market mover, it seemed to be like in any markets that we have trying to move towards the PC2 era, we have seen so many issues, so many hostility as well. I mean, we're talking about thousands of emails on a monthly basis that we have sent out to the banks, to the regulators, telling that the APIs are not working. Even the EIDA certificate for onboarding wasn't accepted because we had like a special character for the city name of Munich or in our certificate. So they were not allowing us to actually onboard even to the banking API. We've been faced with API documentation and with replies and emails that was not in English. So they were refusing to provide us documentation and help in a language that everybody should be able to speak and understand, right? Especially in the tech area. So I think the hostile environment was really bad, like in the transition phase. Obviously, it's getting much better. We've seen much progress, but I think if we want to be able to move forward, we need much more communication, and it shouldn't be we should have to focus on like top-notch quality of the data and not focusing on actually how are we able to access the data and waste our time in communicating, trying to adapt, try to implement APIs, try to map those data fields to a simplified layer to have the opportunity for, as a single API to provide the data to our partners. That should not be our focus. We should focus on creating products. I think this is something that's a learning that we had over the last couple of years, and we should definitely work together with the banks and elevate if we want to move to open finance.
I totally share George's point that like it's been a rocky road to get to where we are today, and what is good is that we're at the stage where we have a pretty substantial amount of APIs working and showing good progress, and we have usage growing everywhere. And there's UK is reporting how many more millions of people are using open banking on a quarterly basis, and so there's like great progress. What I think as we step into open finance, I think the biggest learning for me personally is that regulators can do amazing things. They just have to believe themselves. They have to look at the amazing things they've done with open banking. First, the fact that it exists, and secondly, that it's free. It's just amazing that we have 6,000 banks who offer free access to banking data. It's just payment accounts, but it's just a fantastic start. And then it just open finance should be just built on top of this great foundation. Open finance should also be free. People should be able to freely migrate their banking data if they want to, and also, as you're kind of opening up more data sets, opening up the investment accounts, opening up credit accounts, mortgage accounts, all those things, the regulators should just believe in the power that they have, and the power to move things around and to ask these regulated institutions to be compliant with these laws and to be just brutal about the implementation. And I think the fact that they have not been, brutal enough is it just goes to show that, it took us like 2 years to get to a point where we can say like, yep, it works. But it could have taken us, way shorter amount of time had they had been more brutal about what PSD2, actually is and how the API should work, and like just taking more risk, I suppose. And perhaps regulators are there for the reason that they don't want to take too many risks, but also if they don't take another big risk and go forward with open finance with more force, I think we're just going to end in a situation like we are today, where there's a lot of fantastic applications that are not being built, and a lot of value that is not being created, and a lot of developers that are kind of not jumping onto open banking, but rather playing around with crypto APIs and whatnot. So instead, and I think that's kind of that's a situation you don't want to. This is a conversation you don't want to have sort of 2 years into open finance. I would rather want to have a conversation where we've shown that we can beat US in terms of the value being created on top of open banking. And to also like show Australia that's how much more data you can open up and create value. So that's the conversation that I would love to have 2 years into open finance.
So we started the discussion with putting fun into finance, but I think we now have gone back to, well, actually, this is the first panel I'm on where there was a request for the regulators to be more brutal rather than less. So looking at the future of open finance, kind of, let's assume it's all developed and implemented, and the regulators have been open and brutal, and the banks have been open and brutal. Who's going to capture all that value, in your view, within the value chain?
So one thing that's
yeah, go ahead.
So one thing that the McKinsey report highlighted is that in Europe, they talked about that 1.5% of Europe's GDP by 2030 is going to be created from open banking, and that's kind of like about $200 billion euros of value that can be attributed to open banking. And then McKinsey mentioned that about 45% of that value is going to be created for financial institutions. So clearly the financial institutions are something that is going to capture a lot of this value. But what they also highlighted is that a very significant chunk of that value is going to be absorbed by the SMEs, smaller businesses, the startups, the tech companies that are trying to disrupt the large incumbents, and I think that's very fascinating. That's I think it was about 20 or 30% of the value that the SMEs are going to capture. So I think that's I'm very much looking forward to see what that looks like, how that value capture looks like.
Valdis, maybe?
Yeah, talking about the value chain, I would say that the value should go for users, for SMEs, and for individuals who will be able to use financial application in most convenient way and in most seamlessly way. Because the aim of this open finance is to ease our use of finance. But I would agree with my colleague that, of course, the high street banks, the biggest financial institutions, would get the most of this pie. But of course, fintech companies will also contribute to it and would also get the quite big portion. But all the, let's say, most value would be for society, for individuals and companies to make to play with finance very easy.
Maybe to the big banks. I think it's very interesting what McKinsey mentioned in the report, but I would really like to challenge this. That is such high the percentage, because I think we've seen very nice startups, great SMEs that innovate, invent new things. I mean, banks historically have been very slow to come out with new products, with invention, even with innovation. Right? There are obviously a few exceptions, like the neobanks, like Revolut, N26, Bunk is making a lot of progress there. But like the big banks, I know they have tried in the past to make use of connecting different bank accounts that you may also be in possession to give an holistic overview. If you log into your, I don't know, Nordea account, so you see your transactions from your Swedbank or from your SEB account, for example, right? But I mean, they will have to capitalize on this at some point. But they are also, we have to be very frank here, they are also not the ones who are like the big movers or like of like billions of euros that are moved in especially with the PIS functionality, in terms of like robo advisors, funding, investment portfolios. We have like Scalable Capital, Trade Republic, all these big investment platforms. The crypto space is immensely interesting. You see pay-in options, moving money around. So they are like moving big time money using open banking. And then you see all of these innovators out there in the market, the startups. I mean, they are the ones, even we, the panelists here, all of us, we cannot think of the ideas they could come up with and capitalize on. And surely, I think the banks are even a step behind to think of innovation. They are too big, too slow moving for that. We see garage startup companies that create very nice investment apps for financial well-being. Also, the B2B space is now really coming up, like B2B lending. So why are the banks not profiting from the B2B lending space right now? As the banks are maybe their main customers are business customers, right? But we see startups doing this. So I would really challenge if this is really going to be 45% of the market share.
Yeah, but don't forget also that the high street banks, they have very big amount of customers, and for them it's quite easy to sell this additional, let's say, PSD2 payment options or other stuff. because they already has this huge database of customers, and they have also some, let's say, some strength when, let's say, competing with fintech companies, that they, in most cases, provide much more services for the businesses, for SMEs and individuals. And what we witness in our market, for example, that in many cases, when we are competing with the banks to offer payment initiation service for e-commerce businesses, they, when competing, banks are starting to tell for SME that, listen, if you would move to, for example, Neo Finance as the payment initiation service provider, even for the better conditions we offer, we would consider to cancel your credit line or to not issue you the loan, for example. So the banks here have much bigger strength comparing to new market participants who have nothing else to offer, or just much less to offer for the customers.
Maybe
Gibson,
here on
your
this one, I
thoughts?
think, one second, I think I would definitely agree on banks maybe have the power if they like collaborate together, like we've seen in the Netherlands. Ideal is a very strong player in the market for payment initiation, right? But we also have seen where it fails. In Germany, we had GiroPay, PayDirect. All of these basically failed. They didn't have the chance to get the customer adoption in there. So I mean, there's good and bad examples, but I mean, the thoughts that you just had was very worrying that the banks will leverage their position in blackmailing their customers not to participate in innovation. So it's a very interesting thought, I must admit.
Just to add on what you're saying there, actually you covered most of the things that I was thinking here. I agree. Banks will still get the biggest piece of the pie because they are the holders of all of this data in the customer base, right? But I agree with what Evalda said there. The community, the end user, end consumer will be the one that will have the biggest benefits if open finance goes right. And like Roland is saying there, in 2 years, I want to have a different conversation here where we opened more, we manage to provide more services, because then the consumer will be the one with the most benefits in this whole initiative. But
Yes,
the
and I agree,
banks, yeah.
Yeah, and that should be the focus for everyone, for all participants in the market. It's at the end of the day, it's about customer value. But
Yeah.
I think what we're all suggesting here, opening more data, we might be some of us might be underestimating the power of the banks to actually get value out of that, and perhaps banks will be the greatest customers of companies like Nordigan or Tink. I mean, there's a reason Visa purchased them. So, as final thoughts from each one of you, kind of your wishes for the next stage, kind of how would you want to handle the next couple of years? What would you like to see?
If I may, I think that banks have to be willing to really open more of what they have. I used to say that banks, they do have loads of valuable information, so they need to understand how do they unlock all of that meaningful information to then be part of the ecosystem. And then I hope that they think more about the ecosystem that they can create and not just about the individual customers that they are, providing PSD2 or open finance, whatever new regulation will come, but that they think about the whole ecosystem that can benefit from all of this rich information that they have, that can become even richer, once we manage to get this unlocked, I would say.
I would say that it's we are only, let's say, it's only a beginning of the long journey, and only 2 years passed. And I would agree that looking that only 2 years passed, we did quite a good job, and many banks already opened the APIs, and for example, in Lithuania, most of the customers are already paying using PSD2 solution for utility bills, for example, and it's a good start. And in the future, of course, very much depends on regulators, and the decisions lies on their shoulders. And of course, I would like to believe that we will have PSD 3 and 4, and more data we will get from the data holders like banks, because the perception, the understanding that the data belongs to us, to the users, I think it will be still alive, and it will push this innovation and push the regulator to adopt more favorable regulation for our community.
Yeah. I think what is really needed is way more communication between the market participants, but also between fintech space and the banks. And obviously also I would wish for more trust in the market and what we create. Also to take this back on into the development of the PC2, 3, and 4 APIs when it comes to data needed, data points, how it's structured, or user experience. I mean, we are the experts. We're sitting right next to the customers who are consuming this data, who are going through those flows. And at some point, the banks will also be in that space and eating their own dog food, right? I mean, they will probably consume as well the PC2 APIs of the other banks, if not even their own PC2 API. And then they also want to experience like great user experience and consistent data. So hopefully, moving forward into open finance, we have much more closer dialogue with everybody in the game. That's what I would wish for.
Yeah, the gents have already mentioned the sort of the stuff that the banks can do, what regulators can do. George mentioned that we need more trust. The final thing that probably remains to say is that I'd love to see more developers jump into this. I think it's now there's so many things have been solved. There's so many more opportunities to build amazing apps. We have APIs that work, and for open finance to be as powerful as it could be, we now need to make the best of open banking data, what we have today. And then I'm just hoping to see that developers will be rushing into the space, building stuff, using the fact that data is free and is available, and that you can build applications, and not necessarily for all the applications you need. You don't need to get like a very sort of too complicated use cases to be solved. But you can build things that just like solve very simple problems that people have in their lives. So that's the thing that I'm mostly excited about, and I think that's going to, the more successful we make open banking, the more successful open finance is going to be.
Okay, well, thank you very much, all. Thanks, Roland, George, Ivaldes, Gibson. It's been a very interesting conversation. I think it's clear that we're at the start of the road, but it's been great progress so far. But it needs a lot more effort from the regulators, a lot more openness from banks, and definitely more developers. That's always a good thing to have. Thank you very much.
Okay, Shoal, thank you for your moderation of that panel. Now, in my introduction, I talked about, between banks and the fintechs, it's often a dance. It's maybe a game they play. Sometimes some people describe it as flirtation. But from that discussion in this matter, sometimes it sounds like all-out war. What's your take on that relationship?
I think introducing the third dancing party there, the regulators, kind of makes everything a little bit more complicated, and that's where communication is so important. It's not clear who's the leader here, whether it's the regulator, should it be the banks, should it be third-party aggregators. What is absolutely clear to me, at least, is all three want to engage. Not sure exactly how. I think there's a huge amount of value to be had. but we need to invite more dancers to the game in order to really make it valuable for the end consumer, which is what we're all about.
Okay. I like the way you extended the metaphor there. Okay, that works well. So what are some of the lessons, very quickly, we've only got a few minutes, but take us the lessons moving from open banking to open finance. What are some things that you took away in the panel?
Well, again, it's about creating a single market and single, or helping to create a single interpretation of the regulation and what they mean. A better articulation of the value for all participants, and to me, it's about removing the main blocker for innovation that banks have been talking about for a long time. Why is it only us that have to share the data? If they have access to other providers' data, I think they will jump on the business opportunity. At the moment, they probably think it's too limited to add any value, any meaningful value to them.
Okay. It is very interesting the way these are evolving. We need to leave it there. Charles, thank you very much for your moderation today.
Thank you very much, Lewis. It's been a pleasure. And I hope to see you soon live again.
Hope to see you as well. Okay. Thank you very much.
Thanks.